I'm Jordan Roy-Byrne, and I'm here at the September Metals Investor Forum in downtown, beautiful Vancouver, British Columbia. And with me today is the president of Minera Alamos, Doug Ramshaw. Doug, thanks so much for being with me today.
Good to see you again.
Doug, for those who are not familiar with the Minera Alamos story, let's start by giving a quick overview.
Yeah, we're a Mexican-focused gold mine developer, and I think within a few short months we can say that we're a gold mine builder. We're probably one of only a half dozen companies in the gold universe right now that are not gold producers right now, but will be inside of 12 months. And we specialize in low capex builds with a team that have operated successfully in Mexico for the last 12 years.
Okay, and let's talk about your Santana project, because I know you're getting ready to build that. You received some very exciting news in recent weeks. Can you discuss that?
Yeah, we've now received all federal and state permits required to start construction. So effectively with the permitting that we received both in June and then concluded in August, the permit process took about 14 months. And we're now, a couple of months away from starting a build that's 6 to 7 months. Should have this thing constructed by summer of next year.
And how about financing? How do you plan to get the money to build it? I know you said this is a low capex build, but nevertheless, financing is still important.
Oh, absolutely, and I think I want to address that because we have a lot of shareholders that understand our biggest backer is the Cisco Gold Royalties, and there are other groups that are interested in backing us in terms of the project finance. It is a very modest build. It's a sub 10 million Canadian capital cost. We will look forward to addressing those needs over the next 6 weeks in a manner which we think is going to be very shareholder friendly. We're not looking to do a big equity raise to raise all that money. There are avenues available to us that will mean that we can do this without really suffering any equity dilution. So yeah, stay tuned on that one. I hope that I would have had it by now, but so long as we're in a position to get it done in the next 4 to 6 weeks, we can start construction on schedule in November.
Okay, Doug, and Minera Alamos is not just a single project or a single mine story. You also have the La Fortuna project, which has even stronger economics. Can you discuss that?
Yes, we like the fact that we're a multi-mine build. It gives us some, a production growth profile, which I think will be enviable, as well as organic production growth expansion at both operations. So Fortuna is still a modest capex build. We came out with a PEA in 2018. It's about 25 million US to build it. We would take debt on to largely fund the construction of that one. It would come on a year after Santana. It's a lot easier taking debt on when you're cash flowing on the first operation. So we get the first one built, and then we'll look to the construction of Fortuna. The two combined inside the next 2 years can project to close to 100,000 ounces a year of production.
And how does exploration factor into the story and how you might be able to increase production over the next couple of years?
Hugely, actually, because in many ways, we actually want to make the construction decision on almost the smallest resource that makes sense to do it, but have projects which we can see the upside potential by exploring and expanding that resource base out of cash flow rather than constantly going to the equity markets. We think that is a far more shareholder-friendly way of expanding these things. So any asset we look at, can start at a very modest 300,000-400,000 ounce resource base, which is enough for us to actually get up and running from a production standpoint. But we need to be able to see a path to 1 million, 1.5 million ounces. And so not only will we be a producer, we will have all the excitement of exploration and discovery as well.
And why don't you talk about the team, because you have a team that they've actually done this before. They've done exactly what you're setting out to do again right now.
Yeah, the team is primarily the group that were behind Castle Gold that in 2008 built a 25,000 ounce a year operation for just 6 million US, off a 300,000 ounce resource, expanded that operation out of cash flow over a 2-year period. They quadrupled the resources, and Argonaut Gold bought them for $130 million. So we're doing it all over again with the same team that have operated in Mexico for 12 years and have 3 mines under their belt during that time. So excited that I think we can address the operating risk of building mines. That's what our team likes to do.
Okay, Doug, is there anything else you'd like to add that we forgot to mention?
No, obviously with any company, I think, we have 12-year plans. They're in our PowerPoints on the website. 12-month plans that are on our PowerPoint on the website as of today. And also, an example of what we set out to do over the last 4 months and the fact that we did it. And I think, I always like to say, anytime I'm talking about the company, I have to be held accountable for guidance and what we say we're going to do. And I'm very proud of a track record over the last 4 months since we last met, where everything we said we were going to do, we did. And I hope that gives a lot of confidence to people looking at what the next 12 months will bring, that we'll deliver on that too.
Okay, Doug, and finally, for those who would like to get more information, where can they go to find it? How can they contact you?
From contacting me, I have my cell phone number on the bottom of any press release. I want to be contactable by investors and our shareholders alike, and go out of my way to make sure that they can reach me. If they don't want to talk to me, they can visit everything that I'm going to say, to them on the phone at the website, which is at mineraalamos.com, and we look forward to speaking with people.
Thank you, Doug.
Thanks, John.